Well, hello there, Mavericks. This is Rob Reinhold. It is nice to see you. It is July 7th. We are definitely in the middle of summer, and we got a little summer rally on our hands going on here over the last 3 days. Dow Jones up about 1%, S&P 1.5%, NASDAQ up over 2%, Russell the best performer. And really, we saw a strong up day. If you take a look at the advanced decline line, we basically had a 4-to-1 up versus down stock days. Very strong. Look at the heat map. That being said, look at how many stocks are above or below the 50 MA. We still have 70% of stocks below the 50 MA. So big news, we had the big update, the longest win streak since March. Another big news internationally was Boris Johnson stepped down as a prime minister. That is the thing that actually started the whole rally. The British stock market went up, the British pound went up, and everything got a little bit more enthusiastic overnight. It's never good that a leader has to step down, but whenever a leader steps down and then the market rallies because of it, that is like the biggest insult. So ouch, that's just a huge insult. Let's go ahead and take a look and see these charts. So here we have the first chart, the SPY, and you can see that we have now come above the 20-period moving average. We're above the 20-period moving average, but we are running right into some pretty serious resistance here. And then ultimately, we have that 50-day moving average up above. So look, we thought it was going to be an up week. We called for it to be an up week. And here we are. We've had an up week, but we are running headlong into resistance on a Friday. It's very likely that tomorrow is a day we pause. And then next week is a day we either break out or we turn back down. We don't know which one it's going to be. But as I said, we're running headlong into resistance right here at these points. Taking a look at the Qs are doing much better off the bottom here. As you can see, we broke that resistance around the 289, 290 area, and we're already headed up to that 50-period moving average. This 50-period moving average is a really big area of resistance. That was the highest we got on our little last rally. On a Friday, I think it's very doubtful that we break above. And if we do break above, I really want to see the confirmation of Monday. So right here, right now, basically where we are is we have to take the foot off the gas on the being short and go to a more neutral portfolio at this point. Today, there was nothing but a sea of green, just a green wave over the whole market. Energy had a really big bounce back, and so did large cap tech. The semiconductor sector went up 4.5% today, really powering the rally in the NASDAQ. So this week, when we take a look at our market outlook, we went into this week with a +1 weekly outlook, but basically a -3 monthly outlook because we were still trading below the 20, below the 50, and the 20-50 are sloping lower. Things have changed. So this week is a little stronger than I thought it was going to be. I thought we'd be up like 1, maybe 2% on the week. Looks like we're probably going to be up somewhere around 3 to 4% on the week. And we have now climbed above the 20-period moving average, which means we've got to go to a -1. That's where we are right now. So short term, bullish. Longer term, we still think there is some more downside, but we're definitely not as bearish as we were just a few weeks ago. So let's take a look at some trades and understand when we look at these trades where we are in the cycle. We don't know if that was the ultimate low that we hit 2 weeks ago. We have no idea. All we can go off is the current price action. And the fact that we did not set another new low is telling us, okay, the market doesn't want to go break lower anymore. That doesn't necessarily mean it wants to break higher. For us to be really in the bullish camp, we've got to get above the moving averages. The moving averages have to start to move higher. We would love to see the 20 period cross above the 50 period. That would be the first sign that we actually have a bullish market. Until then, we basically have to say we're no longer as bearish, but we're definitely not bullish at this point. So let's check out some potential trades. It was really easy to find some good bullish trades. It was not as easy to find some good bearish trades. So I went through on the scanner and found, okay, here is Li Automotive. This is a Chinese automotive company, and you can see it bottomed in May. And since May, there's been a ton of buying, not just in Li Automotive, but really all of the Chinese companies. They bottomed out when their COVID restrictions were at their highest. Here we have a stock that has run up to its resistance level. 40, 41 is resistance. We've got an ascending triangle pattern. We have no idea when this is going to break out, but we do know that when these things make a pattern like this, most likely they break higher. I love using diagonal call spreads here, so I'm looking at a 35-40 diagonal call spread. So an August 35, and I'm selling next week's July 15-40 call. If it breaks up and runs, I'll make a little bit of money. If it hangs around here, I'll make some good money. And if it completely crumbles, I'm going to have a manageable loss. One of the reasons I love diagonal call spreads. Next up in the same group is Alibaba. Take a look at this resistance at 120. It took a little bit of tries to get through it. We got through this resistance at 120. Now look, I would have loved for today's candles to be a little bit better. It wasn't a super convincing candle, especially since the NASDAQ closed on its high. The fact that this stock didn't close on its high, definitely a little strike against it. But that being said, we've been trying to work our way above this 120 for an entire month. We finally did it. I like, again, the 120, 125 diagonal call spread. Same thing. August monthlies, 120. Sell next Friday's 125. If it stays between 120 and 125, that's a great trade. If it goes above 125, you made some good money. You close it out next Friday. And if it falls down, then you've got some insulation and it's not that big of a loss. So Chinese internets and Chinese stocks are doing really well at the moment. I don't have anything neutral here at the moment. So let's jump into our potential shorts. This is DWAC. This is Digital World Acquisition Corp. This is a SPAC. And I've been watching this one for a while, and I've actually traded this one this month. And you can see here, what you'd love to see is that the market has rallied, but this stock hasn't. It hasn't rallied at all. It can't put together a rally to save its life. It's telling you that it does not want to go up there. There are more people selling than buying. And right here, right now, even though it's just lost 75% of its value, no one wants to buy it. It's a great time for a short. I'm looking at something like more of a vertical spread, like a 23-25 bear call spread. Not looking to be all that aggressive on anything short here. Jumping over to Beyond Meat. Now, I ran a scan. I said, okay, what are the stocks that have been the worst stocks over the past quarter, but have had the best returns over the last week? And this was it. Take a look at the move that we've seen in Beyond Meat. 22 up to 32. That's about a 45% run in 4 days. Take a look back at what happened in March. When we bottomed out around $36, we ran up to about 50. We're getting a very similar move here. And so I like this one for a short. Not yet. I want to see it start to lose some momentum. Right now, it most likely is some heavy short covering going on. People that are short are scrambling to get out of it. There could be some more upside. But take a look back at what happened in March. We ran up and we spent about 2 weeks churning around until there was no longer that pressure, and then we fell apart. I really like this one, but it's not quite ready yet. I think next week is a much better time to enter beyond here, and probably looking at something like a 30-35 bear call spread, something fairly simple and easy to manage. So we've had a strong week this week. Going into a Friday, we have spent a lot of energy. We've spent a lot of energy this week, and a Friday, the question is, are a bunch of people going to be scrambling to get long this market on a Friday going into a weekend? I don't think so. I think we basically have a very narrow candle tomorrow to where we don't really go anywhere. I would be surprised if we have a big day tomorrow. That being said, there's clearly more buyers than sellers at this point, so I think we do hold these levels that we closed at today. We are right at key resistance levels. I don't think we're going to get substantial breaks above those on a Friday. I just don't think we're going to get it. I think this is more of a Monday story. And Monday, if we have a big down day Monday, I think this is a great bear rally to short into. If we have an up day on Monday, I think you've got to take a look at this market and say, okay, it might be done going down for the moment. It doesn't mean it's going up, but it's done going down for the moment. Friday, we do have the U.S. payrolls report. They're looking for 250,000 new jobs, 3.6% unemployment, and plus 3% wage growth. Likely we'll see numbers right around this. I don't think there's going to be a huge move on it, but again, we never know. And we are right before earnings season, so it's very, very light in earnings season right now. That is the market roundup. Thanks for joining me. Goodbye.